We were talking before about some of the problems that we have in the financial system. And a lot of people say that the problem started with Lehman Brothers or Bear Stearns. But in fact, Northern Rock went belly up several months before Bear Stearns did. So one could reasonably argue that the financial crisis really started here in the UK back in August of 2007 when Northern Rock went on the rocks. And the question is what is the UK economy and financial position like today? Has it been improved or is it still a problem?
Well, I'd actually say the problem started in 1971 when Nixon
yeah,
took us off a gold standard, and I believe it's 40 years
this month.
And I should know the exact date because I've written it enough
August
times.
15th.
August 15th, exactly. And thank you for reminding me. And I think that obviously the UK as the centre of the banking universe, which it is to all intents and purposes, we have a banking system that's 5 times the size of our GDP. There is a too big to fail situation in the eyes of the government. They, from a liberal economist viewpoint, are making all the right noises about liquidation of the financial system by not spending as much, trying to bring down the deficit, the austerity. You can get rid of your debts through you either grow yourself out of the problem, you have an explicit default, or you have an implicit default, which you devalue the currency.
Just to clarify, when you're talking about liberal economists, you're talking about classical liberal economists, not the way the liberal is used in America and other parts around the world.
Yes, absolutely, yeah. And I think, unfortunately, as you can see with the UK, they've actually, when you look at the numbers, really when they said they were going to cut spending, all they did was actually take the inflation rate off. So the stock is still rising. Public sector borrowing is going up exponentially, and I think there's a Tansy effect, which is the mismatch between tax earnings and what they're spending it on, and that's inflationary. So it builds up even more, and I think I explained that correctly. So nobody actually needs to own sterling. It's not a reserve currency. I think that it's been a small bastion of safety at the moment, if you can call it that.
Perceived safety. View of what's going on in the era.
Yeah, and actually, I think very much that we're very much in the same place as possibly Greece.
Yeah.
And I actually think that it's going to come home to roost soon.
Well, actually, I was going to ask you that question. Is the UK economic situation more like Greece or more like Italy? In other words, it's a mess yet to be discovered, or it's one about ready to blow up?
I think that it's probably one about to blow up. It does never cease to amaze me how long markets can remain. I think some people say that speculators are going after Spain and Italy, and maybe that's true, but that's a reflection of the true state of their economies. And if you don't like to hold a bond because it's the wrong price, I have no problem with shorting it either. But going back to the UK, I think that you walk around the streets here and it's like everywhere in Europe. It's Spain. I've just come back from Barcelona, and it feels like everything's fine. But that's obviously because we've spent our capital, made the place look fantastic. But in a few years' time, we're not going to have anything. There is no doubt that outside of London, we have a situation where people are really very concerned about their jobs, and I'm talking from middle-class workers down to sort of lower class, lower social income.
Yeah.
And I think it's going to come across in the next couple of years.
But even London is feeling some pain, isn't it? Because of the problems within the financial industry, the banking system in particular.
Well, volatility, despite how it might seem, has actually dropped off immensely relative to 2009-10. Banking profits have come down in their trading. So all the banks are cutting numbers.
HSBC announced 30,000 globally, I think
yeah, and they said it's going to
are being laid off.
Yeah, and they said it's, I think, 700 or 1,000 in the UK. But yes, I spoke to a colleague who works at Greenwich Capital, my former place, now RBS, and said, just the pricing that's going on, it's very competitive. People aren't making money just in that sector. Obviously, with all the regulatory changes that are coming, they're downsizing. But a couple of years ago, just after the crisis, they were ratcheting back up again. So I'm not sure whether this is something that's going to continue, but certainly I think the UK, to really answer your point, is that we have such unbridled debts that no amount of austerity is going to help us. When you've got growth effectively at zero, there's no income coming in, and just your fiscal burden is going to raise. So I think the Bank of England is going to keep doing the asset purchase programs or some version of it in time.
Possibly leading to hyperinflation?
I think that a hyperinflation is a political phenomenon, and that's and what is meant by that it's when you start monetizing your fiscal imbalance.
That's what the Bank of England is doing.
And that's what the Bank of England's doing. So anyone who says that can't happen, absolutely can. And they are just like, take the US. QE2 stopped, and they did 200% of purchasing of the Treasury issuance in Q1 2011. Sorry, Q1 2011. And now that's stopped. Who's going to buy it? The private sector, possibly, but I think it will be some form of financial repression. You'll force the banks to recapitalize with sovereign debt. They can do that. That could be something that could happen. Actually, that brings up another point, which for me, the banking system and the way it's capitalized, but really predicated on sovereign debt, has been exposed as a Ponzi scheme in Europe particularly. You cannot have provision of capital based on a zero weighting of sovereign debt, because clearly there are scales of credit. And I think that's actually where politicians actually naively before, I don't think they did actually understand the mechanisms, and then they realized that the sovereign debt and the banking debt were synonymous.
I'm not so sure they realize it yet. I mean, they're starting to realize it. Maybe some people still don't, because they continue to pursue these foolhardy policies where they're borrowing money to try to take some of these insolvent institutions and insolvent countries who are never going to meet those debt obligations. They're throwing good money after bad.
Well, let me put a question to you. Clearly, the Eurozone and the creation of the European Union was in theory about creating harmony and stability after, obviously, the awful events of World War II, and really to make Germany impotent in terms of when they actually had the unification. There was you're going to come into the union, this is going to happen, this is when we'll allow you to have this unification. Do you think that today the reason why it went to the wire with this last solution being offered, that actually the French and the Germans are trying to have a political coup here where they take control of the union and they take control of the periphery assets?
Yeah, I think there already has been a political coup, in the sense that one of the key rules of the EU is that the European Central Bank is not going to monetize government deficits. And despite that, despite Mr. Trichet's pledges of not buying sovereign government bonds, he's been buying sovereign government bonds. And so as a consequence, what you have happening is the political control of the euro, which is very, very different from the way the Bundesbank had been managing itself and managing the Deutschmark. So I think the euro is looking more and more like the pound, or more and more like the dollar, in the sense that it's not making, the European Central Bank is not making sound monetary decisions, they're making politically expedient ones. And I think that's one of the reasons why we see the gold price record highs, US dollar record high, euro record high, the British pound.
Even the Aussie dollar has just broken out again, back to the new highs.
Yeah, well, what we're seeing is the flight out of fiat currency into tangible assets, into a safe haven called gold.